Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Chunlai Education Group Co. Limited annual report. China Chunlai Education Group Co. Limited offers private higher education services in China through its universities and colleges. The company also participates in the operation of an independent college, providing students with various educational opportunities. The China Chunlai Education Group, HKEX, 1969 stock price has remained relatively stable over the past year, with minimal fluctuations compared to the broader Hong Kong market. Several news events coincided with periods of low volatility, but their impact was either anticipated by the market or balanced out by other factors. These developments included positive earnings reports, increased student enrollment, and debt refinancing strategies that were expected to boost net profit margins. Despite these encouraging signs, the stock price did not experience significant changes, suggesting a market that has factored in these developments or is characterized by a balanced sentiment among investors. The primary drivers of revenue growth or decline are multifaceted and influenced by various factors. On the growth side, an increase in student enrollment, particularly in employment-oriented curricula, has contributed significantly to revenue expansion. This is evident from the significant rise in student numbers at institutions such as Shankyu University and Jiankang College. Tuition fees have also played a crucial role in driving revenue growth, with a notable 10.3% increase in 2025 compared to the previous year. Furthermore, contract liabilities have increased substantially, indicating a growing demand for educational services. However, on the decline side, a decrease in the number of students has led to a reduction in revenue. Additionally, a decline in contract liabilities related to tuition and boarding fees suggests that some customers are opting out or renegotiating their contracts, resulting in lower revenue recognition. Net income and profit margins have undergone significant changes over the past few years. Initially, net income increased by 34% in 2022, followed by a continued growth of 25% in 2023 and 17% in 2024. However, in 2025, it only grew by 6%. The gross profit margin saw an increase of 2.5% in 2022, but decreased by 3.7% in 2023 and subsequent years. The adjusted net profit margin showed a more consistent growth, increasing by 3.1% in 2022 and continuing to rise until it decreased by 1.7% in 2025. The reasons behind these changes are attributed to an increase in cost of revenue due to higher staff costs and a decrease in finance costs resulting from lower loan scales and interest rates. The company is indeed generating positive operating cash flow. This can be seen in the increasing cash generated from operations, with a rise from RMB 790.9 million in 2024 to RMB 832.3 million in 2025. Additionally, net cash generated from operating activities also shows an increase from RMB 34,214 in 2024 to RMB 199,166 in 2025. Furthermore, the company's cash and cash equivalents have also seen a growth, from RMB 781,240,000 in 2024 to RMB 808,887,000 in 2025. These figures collectively indicate that the company is generating sufficient operating cash flow to support its business operations. The company's debt level and interest expenses have undergone significant changes between 2024 and 2025. The total debt decreased by RMB 289,660, or 12.9%, from RMB 2,248,190 in 2024 to RMB 1,958,530 in 2025. This reduction is largely attributed to a decrease in borrowings, which dropped by 25.6% from RMB 1,728,005 in 2024 to RMB 1,277,981 in 2025. Consequently, interest expenses also decreased significantly, falling by 36.7% from RMB 99,401 in 2024 to RMB 62,969 in 2025. The borrowing costs rate also declined from 5.4% in 2024 to 3.29% in 2025, further contributing to the reduction in interest expenses. These changes indicate a positive trend for the company's financial health and management of debt. Management's outlook on the company's strategy. The company is optimistic about its future growth prospects, driven by a 6.4% increase in student enrollment and solid momentum for sustainable development. To further capitalize on this growth, management plans to deploy advanced technology, such as the DeepSeek Roan model, to optimize student learning and enhance teacher instruction. In addition to expanding its educational capabilities, the company aims to integrate resources through school-enterprise cooperation to cultivate high-quality professionals in key industries like rail transit. Management is also committed to handling teacher misconduct fairly and promoting a culture of ethics among faculty members. Furthermore, the company is taking proactive measures to mitigate climate-related risks by formulating internal policies for emergency response, implementing mitigation measures such as renewable energy exploration, and exploring the use of clean energy to replace fossil fuels. Overall, management's strategy focuses on sustainable growth, innovation, and corporate social responsibility. The company has a history of paying dividends to its shareholders. This is evident from the references provided on pages 45, 181, 183, 205, and 215. On the other hand, there is no record of share buybacks in the company's financial reports, as indicated by the absence of such transactions on pages 32, 214, 215, and 230. That concludes the financial summary for China Chunlai Education Group Co., Limited. Feel free to comment below, and I will be happy to answer them when possible.